Hey traders, Mike here. Welcome back to my channel where I profile the top traders in the world and teach you how to replicate their incredible success. In the past decade, I see more and more young traders becoming millionaires through trading. And the simple reason is nowadays there are more opportunities than ever to make money in the stock market. In fact, I profile many successful traders like Danny Maegaard, Kellogg, or Jake Freeman. So in this video, I'm going to profile another young trader who became a millionaire through trading by the age of 26 and share his trading strategy with you. The trader I'm referring to is Kyle Williams. Kyle is a business graduate from the San Diego State University with a degree in finance. Now, he originally was studying engineering but decided to change his major when he watched the movie The Big Short. Now, the movie was about how a few opportunistic traders made millions betting against the housing market. Like many young traders who strive to make millions in the stock market, Kyle focused on penny stocks first because he felt that they had the potential to make higher returns and were more accessible to him given his starting capital of only $6,000. However, he failed miserably, losing $1,000 or almost 20% of his capital within 2 months of starting. Now, the typical reasons were a lack of knowledge, impatience, and most importantly, the urge to make money right away. You see, Kyle became a gambler instead of a trader as there was no proven statistical edge or trading success rate of what he was doing. He just placed speculative bets on where he thought stock prices were going. In fact, only a few months later, he almost gave up on trading when he experienced 14 losing trades in a row and his capital was down to $2,000. Unfortunately for him, he kept going because he couldn't think of anything else that he wanted to do more. So over the next 3 years, Kyle kept improving his trading and his determination started paying off. He had his first 5-figure month when he made over $16,000, which is more than what he made in a year working his part-time restaurant job. Now, I gathered a chart showing Kyle's trading performance. You can see by the end of 2019, he had made over $92,000 in profits. Then when the raging bull markets of 2020 and 2021 came along, Kyle made $700,000 in 2020 and over $2 million in 2021. In 2022, with the start of the bear market, he still managed to make over $718,000. In total, he has made over $3.6 million in profits and became a millionaire trader. So let me explain to you Kyle's trading style and strategy with you. While Kyle started with penny stocks in 2016, as he made more money, he now trades all types of stocks from large cap to small cap stocks. Now, one trading strategy that helped turn around his trading was to look for dip buying opportunities in the morning. This is when there's a sell-off at the beginning of the market open, where he identifies stocks that have dropped by more than 30%, and typically the move down will often be followed by a bounce back up. Now, what he would do is buy these stocks in anticipation that they will go back up. As Kyle became profitable on this trading strategy, he added another strategy where he would profit from when the stock went down as well. Now, this strategy is called short selling, when a trader borrows shares for a fee and sells them anticipating a lower price. The trader can then buy back the stock at a lower price before returning the shares. Now, by being able to profit from both long and short, Kyle's profits skyrocketed. Now, let me show you an example of the type of trades that Kyle specifically looks for.
So what Kyle looks for is a stock that is extremely weak before the market opens. Then he will put this stock on his watch list. Now, once the market opens, he looks for an opportunity to short the stock once it breaks through key support levels. And as the price falls, and once the stock price starts to consolidate and go sideways, he would exit out of his short position with a profit. Then he would look for an opportunity to buy the stock as long as it didn't break support levels and then ride his long position higher. Now, once the stock price stops going up and starts going sideways, then he will take his profits.
However, in 2022, Kyle adjusted his trading strategy as the dip buying strategy failed to generate much consistent profits, and instead he focused purely on short selling. Now, this strategy of betting on stocks going lower has been very profitable in the current bear market. But Kyle admits that it's not as profitable compared to a bull market where stocks can go up 100, 200, or 300% in a matter of weeks or months. Now, one of the key reasons why Kyle was able to make millions in the stock market was his ability to recognize an incredibly hot market, and his entire focus was to try to milk as much profits as he could because he knew the market would sooner or later turn into a bubble and burst. Now, therefore, instead of playing small or being defensive, Kyle traded much bigger positions than usual and took much bigger risks than before. Now, it paid off for him, but without riding a roller coaster of highs and lows. Now, one of his biggest profits of the year happened in the same year that he had one of his biggest losing trades as well. Before I share with you one of Kyle's biggest trading mistakes, please smash that like button and hit subscribe if you haven't already. I would really appreciate your support. Now, as many of you have heard me say this numerous times, risk management is one of the most important skills to master in trading. And for many young traders, it can be quite hard to comprehend until you've really experienced a huge loss. And this is exactly what Kyle had to go through.
So on July 22nd, 2022, Kyle was watching the stock AMTD Digital, symbol HKD, go from essentially $19.71 a share to about $71 on that same day. Now, he did some research on the stock and didn't see any material news or events that would lead for the stock to go up so sharply. So, thinking this might be a pump and dump scheme, he shorted the stock at an average price of $54.61 with about 500 shares on that same day. Now, the following Monday, the stock dropped sharply and Kyle took his profits, covering his positions at $41.80 for a nice $6,400 profit. However, on July 28th, when the stock price shot from $70 per share to as high as $198 per share, he thought it was another opportunity to profit from the drop in the stock price. Now, he proceeded to short the stock again with 500 shares at $148.46, with a target that would fall below $100 per share, but if it didn't fall, he would exit at a loss at $200 per share. But the mistake that he made was on the very next trading day, the stock price blew past his $200 stop loss price and went as high as $483 per share. Now, Kyle would finally exit his position at $384 with a loss of over $110,000. It was one of Kyle's biggest loss ever, but he was fortunate to have only lost $110,000 because the stock price continued to go much higher over the next few days, going up as high as $2,555 per share, which could have resulted in a loss of over $1.2 million for Kyle. However, the stock price fell over 90% after hitting a peak and is now currently trading for under $10 per share. So even though Kyle was correct about the trade, his timing and prices were off. And more importantly, he broke his stop loss rule, and it was only to risk 1% of his capital on any one trade. A very expensive lesson for Kyle.
Thanks for watching. If you like this video about Kyle, you can watch other videos at the end of this video where I profile other top traders in the world. I'll see you guys in the next video.